What's up everyone, welcome back to my channel. If you are new to the channel, thank you for stopping by. If you are interested in real estate, whether it is buying or selling a home or anything that has to do with real estate that affects you, please subscribe and click all the things because it makes my videos get to more people who have questions about real estate. Now today's video, I want to talk about the differences between using stocks as an investment or using a potential home purchase for a future investment. Quick disclaimer, I am not an attorney or a CPA, so nothing I talk about should be taken for legal advice or financial advice. So if you're having a conversation with your friends, family, maybe even coworkers, if you even hear the word investment, you might completely disengage and get out of there. Well, I'm here to tell you that investing is a great thing and is essentially what our entire economy is built on. However, if you've ever thought about whether or not you want to invest in a home or in a rental property or in the stock market, I think this would be a great video for you. Again, real quick disclaimer, first and foremost, nothing in this video is meant to be financial advice, just wanted to let you know that. So both types of assets have strengths and weaknesses, and here's what you need to know. We've got real estate tycoons and we've got stock market tycoons. We've got really wealthy investors like Warren Buffett, who has built a fortune of around $80 billion. We also have super smart real estate investors like Thach Nguyen, whose cash flow is about $100,000 a month because of his real estate investment. $100,000 a month he cash flows from real estate. The decision between investing in real estate or stocks is a personal one, but if you do it right and you have the right support, both can be extremely successful. Why real estate is better? Number one, you are more in control with your real estate. Every physical real estate investment you have puts you in charge as the CEO. As a CEO, you're able to make improvements, cut costs, refinance your mortgage. Now that rates are all-time lows, you can raise rents, find better tenants, and market it accordingly. With real estate, you're still stuck at the mercy of the economic cycle, but overall, you have much more leeway in making wealth-optimizing decisions. When you invest in stocks, you are what they call a minority investor, who is basically putting your faith in the heads of all the company rather than making your own decisions. Nobody cares more about your investment than you do. Number two, tax advantages. Now, a friendly reminder that I am not an attorney or CPA. I know I've said that multiple times already, but I just want you to let you know this. None of this is financial advice. I will not get much into it, but if you've heard of publication 936 of the IRS, it talks about deducting interest on your property used for your personal residence, where publication 527 of the IRS code talks about deducting interest on a property used for a rental property. As right now in 2020, you can still deduct interest in up to $750,000 in mortgage indebtedness on your primary house. In most cases, the expenses of renting your property, such as things like maintenance, insurance, interest, can all be deducted from your rental income. Number three, it's a tangible asset. Real estate is something you can see, feel, touch, utilize. Real estate can provide a physical space for you to take refuge in. Real estate, regardless of the condition, for the most part, can provide a quality of life, a high quality of life. Stocks aren't even really paper anymore. They're ticker symbols and numbers. If the world goes all out of whack, you can still take shelter in the real estate investment that you have, and you can't in stocks. Number four, it's easier to quantify and analyze. If you can calculate real estate expenses and rental income, that's all you really need when it comes down to buying and valuing a piece of property. If you can borrow at 3% and rent it out at 6% plus yield, you can easily calculate your return. If you have the means to invest, it's pretty easy to figure out if it's going to be worth your while. There's not only the cash flow component, but the underlying equity component that helps investors build wealth. Stocks require you to trust in what the company reports. Number five, less visible volatility. Your house value can be tanking and you will never know it since there is not a daily ticker symbol reminding you of that exact thing. Remember that in terms of losing value in your home, you never actually lose money on the home until you actually sell it. During the 2008-2009 market crash, many people were enjoying their vacation property in Lake Tahoe in Florida, even though its value was getting demolished. Meanwhile, watching the news or checking stocks on the computer screen can really frustrate you. I can say that from personal experience. When your investment is less volatile, or you just don't know about it, it's much easier to go about your day-to-day business. During the March 2020 stock market meltdown, real estate outperformed stocks by far. Money taken out of stocks and put into tangible, less volatile assets like real estate far exceeded the stock market. Number six, it's really a source of pride and satisfaction. Making money for money's sake is a pretty empty feeling after a while. There's just a different sense of pride when you buy real estate. If you're watching this, most likely everyone you know owns stock in the stock market. However, how many people do you know that drive around where they live, surrounding cities, and physically see their investment? There's just a different psychology with real estate. Everyone loves real estate. Nobody congratulates you when you buy a stock. Everyone congratulates when you buy a house, when you buy real estate. Next, I want to talk about why stocks are better than real estate. And this is one of the most important reasons why you need to diversify when you invest. Higher rate of return. Stocks have historically returned 8 to 10% a year compared to 2 to 4% for real estate over the past 60 years. You can also use margin in stocks to help boost your returns. However, I don't recommend this unless your strategy is well proven and you're an experienced trader, because margin does add a lot of risk. Number 2, it's much more liquid. Like I said, in terms of liquidity, if you don't like a stock or you need immediate cash, you can easily sell your stock and boom, you have the cash, you have the money. If you need to cash out real estate, you could potentially take a home equity line of credit, but it can cost you a lot of money and you need at least 80% loan to value in the meantime to take it out. Number 3 is lower transaction costs. As of right now, trading online is free when you trade domestic stocks. Number 4, real estate takes constant managing due to maintenance, conflicts with neighbors, tenant rotation. Stocks can literally be left alone forever and pay out dividends to investors. Without maintenance, you're able to focus on attention elsewhere, such as spending time with your family, business, or traveling the world. Not so much now, but you could. Number 5 is more variety. Unless you're super rich, you can't own properties in Honolulu, San Francisco, Rio, Amsterdam, and all the other great cities of the world. With stocks, you can literally invest in anything that you want for the most part. You can have a very large variety of stock investments. A well-diversified stock portfolio can provide way less volatile opportunities than a property portfolio. Number 6, potentially less ongoing taxes and fees. When buying stocks, you have the stock. It's pretty cut and dry. What you see is what you get. With real estate, there's a lot more moving pieces in terms of taxes and fees. You got property taxes, HOA, maintenance over the years. That could be a lot of money and a lot of headache. All right, so there are just a few differences between investing in real estate and investing in stocks. When you're younger, investing in stocks is easier and makes more sense as you have less money and you're more mobile. As you get older, you probably want to settle down and think about owning real estate. The fact that there was a lot of unknown during the coronavirus, I am inclined to lean slightly towards real estate. However, I do have a bit of money in the stock market as well. Mortgage rates have fallen to all-time lows, and investors want tangible assets that provide shelter and income. The volatility of stocks will most likely stay in effect until some type of vaccine is created, or maybe not even then. Comment below and let me know what you think. Thanks for watching my video. They're they're not tickle symbols, Jimmy. Just like I said, in terms of liquidity, way less. Whoa, a whale.